Hi, my name is Justin, and I'm bringing you two stocks that I think are buys for August 2025. Now, both of these stocks are down roughly 50% year to date. Both of these stocks, both these companies do have risk associated with them, so it's important to do your own research, determine if these are a stock that you would like to add to your portfolio. For me personally, I have both of these companies in my portfolio. So I try to find companies that have, number one, great balance sheets, companies that have plenty of cash, plenty of working capital, have very little to no long term debt. Both these companies qualify for that. I'm looking for companies that have some of the best margins in their industries. Both of these companies qualify for that as well. Both of these companies have almost double the operating margins of their closest peer. So I love that overall. I also try to find companies that are going through an event or multiple events. Hopefully, most of the events are not their fault. In this particular case, some are their fault, some are not their fault, but that will drive down the stock price to hopefully find some really, really great value. And most importantly, I like to buy companies with a margin of safety. So I do my calculations, I forecast revenue, operating earnings, discount it back today to get to a net present value future earnings to come up with an intrinsic share price of the stock. And if it's trading at a 30 to a 50% or more margin of safety, I understand the company might be a really good company to buy into. And in both these cases, I think it is for my portfolio. But again, do your own research. All right, so let's jump into the first stock, and that is United Health Group Incorporated, ticker symbol UNH. Now, as I do this video, the stock is about $250. Not just a year ago, it was up to $600. The stock is down 55% year to date. Now, United Healthcare has gone through multiple events over the last 12 months, from unfortunately their CEO was shot on the streets of New York. Their interim CEO stepped down. They first removed guidance for 2025, then reinstated it. They've just been through a whole heck of a lot of different events over the past year. Now, the biggest risk that they're going through right now is the Department of Justice. They're digging in to see if there's been any overpayments over the last few years for the Medicare space. And they could come back and make United Healthcare pay back some of those overpayments. So it could or could not happen. We just don't know at this point. But that is the biggest risk with the company. Now, as far as financials go of the company, they have some of the best margins in their space. You're talking about 8% operating margins on average over the last several years. You look at companies in the same space, they tend to have operating margins of around 3 to 5%. So being around 8% is absolutely incredible. And this is a company, if you look over the last 3 years, from a revenue CAGR basis, they have grown the company almost 12% per year. If you look at the last 3 years, their EBITDA CAGR has come in at around 10%. Last 3 years, EPS growth has come around 13%. So this is a company that has been buying back a lot of shares over the last decade. They generate a ton of free cash flow. They generate a ton of operating earnings. Because they have around over $400 billion of revenue, their normalized operating margin has been around 8%. This year, they should be generating around $25 to $30 billion of operating earnings. Unfortunately, it's not just with United Healthcare, but really the healthcare space in general just had a lot more medical costs than they had anticipated this year. These companies go out and hire very expensive companies that are actuaries to go out and forecast medical costs, and they just got them wrong this year. And that's across the board for all these companies. Humana, Oscar, United Healthcare, they're all dealing with the same thing. For United Healthcare, it was about a $6.5 billion miss on what they thought the medical costs were going to be this year. And healthcare insurance companies are not flexible, right? So they set their premiums in the fourth quarter for the following year. So when they get those premiums set in place and they find out the medical costs are higher than they thought they were going to be, they can't just change those costs. They have to wait till they renew their premiums, which they'll do, later this year. So that I think they'll be in good shape going to 2026. We just don't know what the final tally is going to be from the DOJ, if any, when it comes to overpayments for the Medicare space. But United Healthcare, I think, nonetheless, even if they have to pay something, they're going to be okay long term, and they're in really, really good shape. And I did do a video recently, I'll put a link up here, that goes into the intrinsic value of what I think United Healthcare is. So if you want to go check that out, I do a deep dive into the company, what I think the fair price is. So go check that out if you want to. Now, the second company that I want to talk about is Lululemon, ticker symbol LULU. So currently the stock is roughly $190 as I do this video here today. Now, this stock is also down roughly 50% year to date. So this company is going through, really one large event right now. And really, it's a lot of apparel companies are going through the same thing, and that is tariff costs. So a lot of these manufacturing companies of apparel have shifted a lot of their manufacturing overseas. China, Vietnam, Indonesia. So really a lot of the companies out in Asia and around Asia, that's where they do a lot of their manufacturing. And because of the tariffs that have occurred this year, that has really put, a fork into a lot of the gross margin, operating margins of these companies. Lululemon has some of the best margins you're going to find of any apparel company anywhere. I mean, if you look at Nike's gross margins are around 45%. Their operating margins are around that 10 to 13%. Lululemon has over 20% operating margins and 60% gross margins, which is absolutely phenomenal. Not only that, but the last 3 years, the revenue growth has come in around 19% per year. The last 3 years, EBITDA CAGR has come in at 22%. Last 3 years for EPS growth has about 23% per year. So they have bought back shares similar to United Healthcare, but not at the rate that United Healthcare has. This is a company that has grown really fast on the top line, which has driven the growth on the bottom line. Now, the tariff certainly is the biggest impact to this company because they do a lot of manufacturing overseas. They have several different places they do manufacturing, but most of it is overseas. And the company's been saying that they're going to have about 160 basis point hit on gross margin in the second half of this year, which is pretty substantial. Not only that, but the market is concerned about the growth. This is a company, like I just said, that has been growing the top line 19% per year over the last 3 years, which is incredible growth. Now, that slowed down to around 8 to 10% this last quarter. So the market's thinking, okay, well, this is not really a growth story anymore. Where I think the market is missing it is the company is starting to have a big international space. So even though North America has slowed down into the single digits as far as growth goes, China has grown almost 20% year over year. So that growth that the market thinks is falling, I think the international growth is going to propel the company going into the future. In fact, historically, they've really geared the company towards females, but the male aspect of their business too is actually growing pretty fast, like the high single digits as well. So I think the male apparel growth with international growth is really going to propel the company long term overall. So there you have it. Those are the two stop buys I think are buys for August 2025. So that was United Health Group and that was Lululemon. Again, both of these companies I personally own in my portfolio. I'm a long-term investor, so I don't really care what's going to happen with a company over the next 3 months, 6 months, even the next year. I'm looking at years into the future. So both these companies are going through events right now, like United Healthcare, even with the DOJ, say they come back and make the company pay something. I don't really care what's going to happen the next year. This is a long-term play for me. I think 3 years down the road, 4 years down the road, the company is going to be just fine. I also think Lululemon is going to be just fine as well. I think they're going to figure out how to lower their costs for manufacturing. Maybe they'll bring stuff into North America and build it here or make it here. That could be a possibility too. But because of their great management team, I think they're going to figure out a way to get back to where their margins have been historically. And that's just my thought overall. So thank you guys for watching so much. I really appreciate it. If you don't know how to value companies yourself, I do offer valuation templates on my Discord channel and my Patreon, which will show you exactly how to value companies yourself. I'll put a link down below on my Patreon, which you get access to my Discord channel and exclusive posts on Patreon as well. Go check those out if you're interested. Thank you so much for watching. I really appreciate it. Catch you on the other side. Take care and God bless.